Today, Bitcoin drops back below $100,000 amid a broader crypto sell-off. And after the EU's crypto rules took effect at the end of last year, Sid Powell of Maple lays out what impact the regulations will have on the industry. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Crypto markets falling this morning, shedding yesterday's gains. As of noon Eastern, Bitcoin fell back below the 100K level to $97,000. Ether dropped nearly 7% to $34.57, and Solana sank 6% to $207. Okay, let's talk about the top stories. CFTC Chair Rostin Behnam announced he's stepping down from the agency. His last day as chairman will be January 20th, Inauguration Day, and he will leave the agency entirely in early February. As the agency's head, Behnam embraced both Bitcoin and Ether as commodities, sometimes clashing with SEC Chair Gary Gensler, whose standing on ETH has been more ambiguous. Gensler will also step down from his role on Inauguration Day. The CFTC took legal actions against a number of crypto firms under Behnam's leadership, including FTX and Binance. Behnam said he would work closely with President-elect Trump's team to ensure a smooth transition. Next, sticking with the CFTC, crypto exchange Gemini reached a settlement in its legal battle with the regulator. The firm, which was founded by the Winklevoss twins, will pay the agency $5 million. Back in May, for an unrelated matter, the company returned nearly $2.2 billion to users of its defunct crypto lending program. The CFTC sued Gemini in June of 2022, accusing it of making false or misleading statements to the agency regarding a futures product certification back in 2017. All right, let's turn to Mika for our main story. The European Union's Markets in Crypto Assets regulation went into full effect at the end of 2024, and Crypto World's Tanea McKeel spoke with Sid Powell of Maple to find out what impact the rules will have on the crypto industry. She also asked him what the rules mean for Tether after the stablecoin faced delisting for Coinbase's European customers.
Mika, the Markets in Crypto Assets regulation went into full effect in December after a staggered rollout. So just to set the scene for people who are unaware, what do these new rules mean for crypto businesses and users in the region?
Yeah, good question, Tanea. So MiCA is the market structure bill for Europe. So what this aims to do is set out rules for the issuance of tokens, as well as the provision of crypto services. So think trading, savings accounts, margin services, derivatives for any institutions or any startups who wish to operate in Europe. So it's quite a big piece of legislation.
One of the big questions for this regulation is about how it's going to affect assets already trading in the region. So on the stablecoin side, we saw, Coinbase take the step of removing Tether for its European customers due to MiCA concerns. So how big of an impact is that for Tether? And is that a benefit for some of the other stablecoins operating in the region that haven't faced similar questions?
It's a very good question. Stablecoins are a big focus in the world of crypto at the moment. Coinbase, of course, has a vested interest given that they have a share of the economics of USDC. But I think overall, when you take a step back and look at Tether, they have over 140 billion in outstanding market cap. And so this was less than 3% of issuance. So I think this is a short-term setback for Tether, but around the world, they still have a very strong position as the leader in stablecoins, and they have very strong network effects, particularly in Asia where most of the trading volume occurs. But I think no doubt this was a win for Circle and for Coinbase with respect to USDC.
How would you characterize the significance of stablecoins around the world right now and this year? Given that we did see so many stablecoin launches or announcements toward the end of the year in 2024, and historically stablecoins, they're a trading story. They're a measure of market liquidity, and they historically have been used mostly for trading. And we know well that there are other use cases beyond the trading. So what is sort of the story of stablecoins that you see happening in 2025?
I think a really good question. So we saw a flurry of launches of new stablecoins. So Ripple entered the market. There was talk of Revolut entering the market. PayPal, of course, entered the market last year. But what we've seen is the evolution of stablecoins moving from just a trading currency to store of value, particularly in emerging markets, which I think Tether has done a good job of penetrating. So people in emerging markets want to preserve their purchasing power, which is generally eroded by holding local currencies that are inflated away. The second element is payment processing. And I think this was really what attracted PayPal to the stablecoin market, is the idea that they could, instead of needing to use banking networks or the Visa network, that they could instead just use their own stablecoin and cut out a lot of costs there. So we've seen the evolution and the maturation of stablecoins as a product from just a trading pair to payment processing and store of value. And we're seeing increasing interest now from traditional players who see that they might lose revenue. I think this was a big driver behind Visa's focus on stablecoins.
And then looking at the US, if I can for a second, obviously the regulatory environment has changed drastically in the past few months. Mm-hmm. People are a lot more optimistic about rulemaking here. Is MiCA the blueprint for the US, and do you expect lawmakers to follow a similar path?
I think lawmakers are currently on a similar path. We had the FIT bill last year, which passed in the lower house but did not pass in the upper house. So people are looking and speculating as to whether the US will see a market structure bill, whether that's FIT or something else. But my concern as an operator and a builder in the space would be that the US goes too far in terms of setting in place rigid rules, which would increase the cost for startups and therefore decrease innovation. Because I think overall the North Star for the incoming administration is to foster innovation and ensure that the US is number one in the blockchain and crypto space. So I think we're seeing overall a move towards something more like what Europe has in place, but I would hope that they tread carefully in terms of not putting in place rules that are too rigid or make it too costly to set up a startup, which of course has been the story for startups over the last 20 years in the European Union.
Yeah, definitely going to be a good one to watch that theme play out this year. Finally, what does development in the crypto space look like this coming year? So Maple is focused on DeFi for institutions. Mm-hmm. Do you see this crypto cycle as being about onboarding institutions and expanding adoption there rather than retail investors?
Yeah, I do see that as a huge story for the 2025 cycle. So, I mean, just as some indicators, with the launch of the Bitcoin ETF or the approvals there, we saw much more institutional interest in participating in the space. Maple is focused on tokenized private credit, so we lend to institutions. And what we have seen is more inquiries from institutions, whether they are US-based or European-based, in terms of participating, whether this is holding funds that might hold or issuing funds that might hold tokenized assets, or onboarding private wealth clients. So I think what that means for the space is pay attention to DeFi, which I expect to see a resurgence based mostly on the change in regulatory environment in the US. And then I think also RWAs will continue to be a trend, a positive trend off the back of institutional adoption. And then the other one I'm paying attention to is GameFi. Also for the same reasons, that I think it'll probably benefit from a more favorable regulatory environment. So overall, DeFi and RWAs are still my front-running pick for 2025.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.